Tech stocks have been under pressure. All of the Magnificent Seven are negative so far this year, taking the brunt of the beating in the market as President Trump's trade policies rattle investors after 2 years of massive gains. Is this an opportunity for investors or a cause for concern? Joining me now, we've got John Belton. He's a portfolio manager at Gabelli Funds. John, good to see you. So what do investors need to know about the volatility in the tech sector that we've seen transpire to this point through the first quarter of the year?
Yeah, good to see you. So, I think that the starting point I'd begin with is every Mag 7 stock is lagging the S&P 500 year to date, which is sort of an interesting stat. So the Mag 7 has become the Lag 7 this year. I think a lot of the pain or the sell-off in a lot of these names started before a lot of the tariff concerns. There was a tech-specific negative catalyst earlier in the year when the Chinese AI model company DeepSeek released their new model, and we all know how that turned out for the sector. But a lot of these stocks have experienced a lot of pain so far. I think from here, I'm trying to stay focused on the long term. If we're talking about AI, I think a lot of the long-term fundamentals there remain very much intact. In fact, I think a lot of the recent news flow we've heard in that space has been quite positive. So I do think the fundamentals for these companies remain generally strong. And so, yeah, there's definitely some opportunities out there that are starting to emerge.
Okay, and so help us qualify what is a sound tech trade right now versus a weaker tech trade.
Well, I think so. If we're sticking with the Magnificent Seven, I think the mechanical impact of tariffs, given everything we know today, that's been priced in. I think what hasn't necessarily been priced in, or what we're really focused on now, is how does all this uncertainty around trade policy impact the macroeconomic outlook? How does it impact the consumer, and how does it impact business capital spending plans? And so I think across the Mag 7, there's a big range in how cyclical some of these business models are. So on one end, you have the digital advertising companies, Meta, Google, and their peers, quite cyclical businesses, at least relative to the other Mag 7. On the other, you have some of the enterprise software companies like Microsoft, much less cyclical, much more defensive business model. So I think that's sort of the next leg of this trade, or the next leg of this market cycle, is trying to figure out what is the macroeconomic outlook. Are we going into recession? How durable have these fundamentals that we've seen until now? How durable are those going forward?
Okay, and so what's the mix of technology in your portfolio when you are kind of enacting a defensive strategy because of a certain threshold of uncertainty that we've clearly seen struck within the markets at this juncture of the year?
So it depends on what exactly you consider technology, because our Meta and Google and Alphabet are those media companies, or are those technology companies? But I think if we take technology into kind of the subsectors, we're starting to get a little bit more constructive on a subsector like software, as an example. Particularly some of the more defensive areas within software, like back office software, stuff that's harder to rip out. So I think that's a much more defensive area of tech. Semiconductors, I think there's a range there. There's cyclical, sort of more analog semiconductors, where I think more cautious there. But some of the AI semis, again, some of these stocks have taken a lot of pain year to date, and I think a lot of the fundamentals there remain pretty strong. So we're cautiously optimistic on some of those names, and we're sticking with those despite what's been a challenging year so far. Yeah, go ahead.
Sorry. I'll allow you to finish real quick.
No, I was just going to say, then outside of semis and software, you have a whole other range. You have e-commerce being another vertical within tech, and I think that's also a more cyclical subsector. But within that space, we do still like Amazon as an example.
Okay, so within that, I guess what you're starting to get at too here is the difference between some of the core business-to-business technology names that typically promote some higher margins, that sell into their existing portfolio base, and then also look to gain net new customers and subscribers either on a license basis or on just kind of a block purchase basis versus those that are more business to consumer that rely on their advertising sales to really kind of buoy their own margin model as well. As you're kind of looking across those two differing sides of technology, and of course some of them like Amazon and Microsoft overlap, where is there more strength from your own evaluation?
Right. So the question is kind of looking at consumer tech versus B2B tech, where what do we like more right now? I think this is maybe a cop-out answer, but it is a little hard to generalize there. But I think we would generally gravitate towards more B2B type platforms in the current environment. But within that, I think you have to figure out which areas are going to be the first to be pulled back if IT spending pulls back, and versus which are the more the harder to rip out solutions that are being provided. I think very defensive kind of back office software, a company like Intuit, we still really like in this environment. We like some of those ideas versus just using as an example, we don't own Salesforce, but Salesforce we think would be a little bit more prone to IT spend pulling back in this environment. So I think it's hard to generalize, and then just as to tie the bow there. I mean, I think one thing we're hearing very consistently from IT executives and from different channel checks that we do before earnings, again, AI remains very, very high priority. I think companies are very reluctant to pull back spend on AI solutions. So I think doesn't really fit either of these buckets that we've been talking about cleanly, but I think it's an area that for various reasons is very high priority. It's going to be harder for companies to pull back a lot of that spend.
Yeah, interesting analysis. John, thanks so much for taking the time having the conversation with us.
Thank you.